And I am live, finally, again from San Antonio, Texas. I have had a very nice trip through Europe and South Africa, and we are back talking about what you care about, which is how can you potentially make a living off of crypto, or at the very least, make some supplemental income in crypto. That is what I'm all about, really. And as opposed to what a lot of other traders do, I have a very well rounded approach where I actually use a decentralized finance to generate my daily income. And I use trading to scale. So if you look here, for example, these are my daily earnings every day. For the most part, $300. That's what I wake up with. And that is because of decentralized finance, not because of trading. So if you would like to know how to make that happen for yourself, go to crypto.lifestyle and join my mailing list because there's a lot to learn. Now, my little animated slide here for today says $89,500. That is, in my opinion, a potential strong resistance level, which we call a bull trap, right? Is when people get super bullish and then they jump into the coins, but somehow we know that we are potentially getting a strong rejection. And since everything in trading and crypto is about always setting yourself in a place where you have the best risk to reward ratio, I don't think that I am wanting to buy this short-term pump right now. I do think that if you are a trader and you know how to short the Bitcoin, then that is potentially something you want to do. So we're going to look at those charts. I'm going to explain to you why I think that we're going to see a little bit more increase, but then a rejection. And then I'll also show you, if you do have time to spend more behind the charts and you want to be a day trader, then I'm going to show you a day trade that is already too late, right? It's already too late to execute it. But I want to show you what to pay attention to, because that is very important that you start developing an eye for these situations. But again, don't forget, what I do is I am leading my business. I'm finding time to have a lot of energy and health in my life. And I have my consistent income, no matter what happens, based on DeFi. And I use trading to scale my positions up. Okay, so I'm showing you again here my daily earnings, about $300 every day because of DeFi, not because of trading. Because trading doesn't make you money every day. It is not possible for you to make money every day in trader unless you are the Warren Buffett of trading. Okay, so if you are that person, please let me know. I would like to get to know you. But for everyone else, just go to crypto.lifestyle. The landing page is blended in. Join my mailing list because there's so much to learn and very few know it. All right, let's get started. I'm getting ready here for the show, and here we go. All right, so let's take a look at the charts as they are right now, live charts here on my show. And we have, in this instance, this is Bitcoin, okay? And you see, it really had a phenomenal weekend. How much percent up is that? That is 6% up. over the weekend. Okay, that's really nice. A nice move. If you caught that move, congratulations. That's really awesome. What I want to look at now is, again, everybody is getting bullish. People are getting very excited. But you see, as I zoom out a little bit, just a little bit, okay, you see here this red rectangle here, a very long rectangle, is starting at about 89,500, and then it goes up to, yeah, I set it to really 93,000 here. I think this is a zone where there's going to be a strong, strong rejection that Bitcoin will face, right? So if you are bullish right now, then you are kind of, your mind is thinking the following, okay? Your mind is thinking, I'm buying here, and I think I can go up to all-time highs here, about here. So you're thinking this, okay? But we always have to ask ourselves, are we in a position where this is very likely to happen right now? I don't think so. I think this can still happen this year, but I don't think so right now. And here's why. As you zoom out, you can see, of course, here's this very, very important level that we first need to reclaim, okay? And when we reclaim a level, usually what that means is that we first bounce off of it. So what I'm seeing is I'm seeing Bitcoin push into that level this week and then reject off of it, right? And I see the rejection going down probably here in the 78,000 region. And then this would actually be very healthy, because then we would potentially have the big players finally have those levels that they want to buy the dip. Okay, and then I think there is a chance that we can visit this upper resistance here again, and then we might be rejecting one more time, and then we finally go above this level, right? And that's kind of what I'm preparing for right now. So what that means is, for those investing in Bitcoin, it's very important to be patient now. Shorting the market is only for you if you are more advanced anyway, right? But if you just are thinking, when should I buy my Bitcoin? Well, I'm going to wait for either here, this is where I'll buy more Bitcoin, or very clearly when there is strong support. This, you don't have to be in a rush here, because as it regains this level as support, it will spend some time around here, right? So definitely I'm going to wait for this. Potentially, even if you want to be super conservative, then I would even wait for this level to be reclaimed here. So in trading, we have these Fibonacci levels that are important, right? And you can see, just like magic, always at the 0.236, 382, and 618, there's always important zones. And that is not by coincidence, right? That is because traders and institutional investors pay very close attention to these levels. So the name of the game essentially for you is to be patient enough to wait until these levels are reclaimed. That's that, right? So again, what I'm doing now over the course of probably the next 2 to 3 days, I think this will unfold. I'm waiting for the price of Bitcoin to get a little bit closer here, and then I'm likely going to open a short position. Now, I'm going to set a stop loss, of course, if I'm wrong, and that is always possible that I'm wrong. Every trader is wrong often enough. The key is that you want to be managing your stop loss. And it's very interesting, actually. If you manage your risk and your stop loss, then you can be wrong 60% of the time and still make money. Why, are you asking? Well, it is because you have a favorable risk to reward ratio. Okay. So if I look at this trade setup, I click this tool, this short tool, you can see that I have a risk to reward ratio of 2. Okay. Meaning what I can lose is the red part, but what I can gain is the green part. And if I do this consistently in a correct fashion, then I am actually making money, even if I lose 60% of the time. So of course, you also always want to also know what is the risk that you're willing to put on the table for one specific trade. And that really depends on what kind of trader you are, but you should really stick around 0.5 to 1% of your trading portfolio. What does that mean? Well, it means if you have, let's say, if you have $1,000 to trade with, then you never want to risk more than 1% of that $1,000. So $10. Okay. So that would mean in this trade, you could lose a maximum of $10, but also you could make 20. You could make 20. So again, this is how trading works. And I will say, I'm going to warn you, trading takes a lot of time. Trading takes a lot of time. Day trading actually is what takes most of the time, 4 to 5 hours behind your screens, consuming information. So that is most likely not something that is realistic for you. By the way, let's do this really quick. Like this stream, subscribe and also share it, please. Share it with someone that you think will find this valuable. So I said day trading is something that is probably not very realistic for most of you. Investing, meaning you have about half an hour per week to look at the markets. Yes, with the help of a community like the one we offer here at crypto.lifestyle, just go and sign up so you're part of the community, or you learn how to do that. And then the other aspect, of course, is how do I generate daily cash flow? Again, I'm different in that sense where I do trade, but I have my daily income based on DeFi, decentralized finance. And I use trading to scale, but I do it in a way where I have time to let those opportunities develop. Because as you've just seen on the charts, it's really important to wait for that correct entry. Reminding you again, these are my personal daily DeFi gains. And that is, of course, something that I can offer to teach you if you join my crypto.lifestyle list. I also promised you to look at a day trade example. It has already unfolded, so it's too late to take it now, but I think it's really important for you to develop an eye for these moments so that you can prepare yourselves for that moment. Should you decide to engage in day trading? Should you decide to engage in day trading? Okay, let's bring back the chart. So I am now looking at a coin called Beam. Beam is here, okay? And this was the opportunity here. We are on a 4-hour chart, okay? So each bar represents 4 hours. So the opportunity was here, okay? So this was the opportunity. So how would you have spotted that opportunity? Well, you would have looked at your daily chart, and then you would have seen a downtrend here, downtrend, and you would have marked it with a decreasing line. And the moment it had broken that trend, we call it it breaks the trend, is when it crosses the line. So here, the moment it did this here, you would have started to pay attention. Now, this is before the trade. You're getting interested because you're like, ooh, this is outside of this trend, number one. Okay. And then you take a very long high time level view, And essentially, the second thing that you recognize is you're like, oh, not only did it break a trend, it also happens at a very interesting level here. See this red rectangle? It is essentially where this specific coin started its first rally up, and now it's back down. Okay, it got back down here, and it's breaking trend. So that would be the second indicator that you want to pay attention to. Next, remember these Fibonacci levels. Okay, so you set the Fibonacci basically from the lowest to the highest point. So I'm going to do that here. Okay, there we go. See, let's do it like so. Okay, so now, now what you do is you zoom in very close to this situation here where it broke trend. Okay, and you basically, I always talk about this V-shaped recovery here. You see that V? Let me get where's my brush? Oh, yeah. So this is a V, right? This is a V-shaped recovery or bounce. And essentially, what you want to do is you want to place a lid on top of the V, that cup. So here you're getting interested, but the moment you really get interested and looking for an entry is when the price exceeds this cup. Okay, so that would have been here around 0.0073 cent. Okay, so around here, this is where you would have said, okay, now I might enter a trade. Okay, so you would have used your long position and said, you know, if it goes back down to here, I probably, let's see here, I probably have invalidated my theory. But if I'm right, then I think it will push way higher. It always pushed to the next resistance level, which would have been here. Okay, so as you see, we have a 4-to-1 risk reward ratio. So that's a really great trade. Now, if you believe that the bull run is going to continue, which there is a likelihood, then I don't see why this coin could not continue further to the next Fibonacci line here. So that is a 14-to-1 risk reward trade. Okay, so this means that we're basically, of course, we're here now, right? We missed this trade that early, but even if you jump in now, it's still a 2.5 risk to reward ratio. Okay, so still worth considering, because you are just, it's still this situation here, look, where we fill the cup here. Okay, we fill the cup here like so. So this essentially is the next opportunity. You go to a higher time frame. Let's do this exercise together. So this trend here, see how this is also a trend, but on a higher time frame. Let me do this. Okay, so it's actually a much longer term trend. And now this is the difference between day trading, by the way, and midterm, like something in between long-term investing and short-term trading, right? Because now you have the same situation here. You have the break of trend, and you're looking for, well, when do I think is a good entry? And I've just shown you. You zoom in, and you're like, okay, if price exceeds this, then we have this V, this cup filled, and then if it goes anywhere below here, my theory is invalidated. Okay. But if it continues to climb, then I have a good trade. And again, like, do you see here? Let's see. You always need to look at the high time frame and see when was there a resistance or support in the past. So clearly here, I see this, right? We see it here. There it was support, resistance, support, support, support. And not only that, it also happens to work with our Fibonacci levels. Remember there? We do this. So Fibonacci level. So honestly, if we have a good bull run, which that is still possible, then it might even go as high as this. It's absolutely possible. Obviously, here is going to be strong, strong rejection, but that's still possible, like something like that. So anyway, you get the idea. Put your questions in the chat. Doesn't matter what kind of question it is. If I know the answer, I'll give you one. If I don't, I'll do my research. Now, going back to Bitcoin and me thinking is going to reject here first. There are two reasons why I think that. Okay, so the first one is this is the chart of the daily exchange volume. That essentially means how many new people convert dollars into crypto. And that is a downwards trending chart. Okay, so that's not good. We need more what we call retail investors, which is simple people, who are not professional traders. We need more retail investors to come back into the space. So that's that. And the other reason is the liquidation heat map. Let me actually quickly reload it. So, oh, you can't even see that. I'm sorry, I'm going to share this screen differently here. Present, share screen, and the entire window. Here we go. Okay, so this was the daily exchange volume downtrending. Okay, so when the bull is back in full force, we need this to trend up, not down. So meaning more people are joining crypto again. And then the liquidation heat map is this here, which basically shows when have people set their bets in the wrong way and they're getting liquidated. So here you see a lot of bets underneath the current price. And that means there's a lot of liquidity to be taken here. And typically the market goes and fetches that liquidity. If it's close, it is like a magnet, if you will. Okay, so there's liquidity here between 86 and 83,000. So if we look at the chart here, so that goes down until here. Okay, which is why, again, I think shorting is the better approach. But that's just my opinion. I could be wrong, which that happens often enough. Which again is why I actually really like to focus my cash flow is generated in decentralized finance, which is something that I really need to explain to you, is not easily explained. I like to use liquidity pools, and I will I think I'm gonna have a masterclass in a week about liquidity pools where I will show you exactly how to also get in position to have that daily cash flow, no matter what happens in your trading. So, of course, if you want to be part of that masterclass, you have to be on my mailing list, crypto.lifestyle. Okay, well, this was interesting. Is there anything else? Put your questions and comments in the chat. Even if I don't get to it today, I will definitely include it in my show tomorrow. But for now, thank you so much for having been with me. And I will see you very, very soon again on this channel. Bye-bye for now.